Good afternoon, everybody.
Good afternoon, Mr. Wilkinson.
How is everybody today?
Okay, thanks.
Okay, sounds good, sounds good.
I'm doing well.
Wonderful, wonderful, because as you know, today is our last class before your midterm next week. I trust that you have been studying and reading and studying and reading, and that you used your rainy holiday weekend most productively from an audit perspective. No response?
Oh, I didn't know you wanted a response.
Oh, yeah.
We doing something, Mr. Wilkinson. We doing something. We ain't just sitting there not doing anything.
Okie dokie, because we know in Bahamian, something is a funny word.
Yeah.
It's everything or nothing.
Oh Lord.
So let's make sure it's not the nothing side of something. How's that?
You're right, you're right.
But I understand the something. Okay, been there, done that. Know how it is. All right, so just give it your best shot. Don't drive yourself insane and all that kind of stuff. Just whatever methods you use for studying all your life, go ahead and use those same methods.
Sorry, Mr. Wilkinson.
Hi, Janelle.
I was under the impression that you would have told us if it was going to be virtual or in person today.
Would you believe that I am going to tell
The
you?
exam, midterm.
I am going to tell you.
I'm sorry?
I will tell you in a moment. Did you hear me?
No, I didn't hear you.
I said I will tell you in a moment whether it'll be virtual or in-house.
Okay, thank you.
No problem, no problem. Okay, but first of all, let's see who's with us. Hopefully, all hands are on deck today. Week number 5 already. Where does time go? We just said hello, introduced ourselves, and here we are now in week number 5. Wow. Okay, I know Danielle is here. She wants to know what the venue will be. India. Okay, India is on the way. Hopefully. Gretchen.
Hi, Mr. Wilkinson.
Hi, Gretchen. Do you have like another name that you use, Gretchen?
You call me Mandy.
Mandy.
Yes, sir.
As in Barry Manilow's Oh Mandy?
Yeah.
Okay. Because I saw it come up somewhere. I'm like,
Oh, my email.
Exactly. I was wondering, did I have the right email? Because
I name Amanda.
Ah, Amanda. Interesting. Okay. Okay, Mandy. That's a little more cool than Gretchen, actually. Nothing wrong with Gretchen. Just reminds you of Hansel and Gretel, that stuff. Okay, Mandy is cool.
Oh, sorry, I present. I was just doing something.
Okay. Now, India.
Yes.
You know, in Bahamianese, when you say something, it makes us suspicious and we want to know what.
I was blending something in the blender, so I didn't hear you.
I know. I was just teasing.
Yeah.
I was just teasing. Actually, in my own experience, whenever I ask my wife a question and she says something, I tell her it just makes me curious. Why don't you just come out and tell me what it is so I don't have to ask you? Something like what? Okay. Rosalie. Monroe.
I'm here. Sorry, I was trying to unmute my baby on there screaming, man. I still want your let him screaming. Charlotte Wilkinson, I'd be doing these class with him right on the side of me, and I here trying to figure out what his audit program, and he here on the side of me asking for tea and Milo. It ain't easy.
I know, I know. How old is he again?
He's 2.
Oh my God, terrible tools.
And then I in the room, so to keep him occupied, I got on the show. So I try not to let y'all hear the song playing out there too. So, yeah, I don't know if I can talk much this class today.
That's okay. We'll work through his agenda and all that stuff. Don't worry about it. Just keep on trucking. You're
Okay.
right on track for sure.
right.
I remember back in the old days when my kids were little, especially my oldest son, little Sam, depending on what happened back in those days when I was lecturing at the Old College of the Bahamas and other places, I used to have to take him to some of my lectures with me because other things are happening and give him a coloring book and put him in the back of the room and give him the dad look like, just be quiet while I do this. And so I get it completely. Don't worry about it. Okay. Ebony.
Here.
Okay, Ebony, yes, right there. Karen.
Hi.
Ah, there you are, Karen. Excellent, excellent. Okay, so everybody's on board. Let me just confirm Danielle's question. The Institute has advised me that the examinations, both of them, will be in-house, face-to-face. So next Thursday at 6:30, you need to be present at the Institute's center on Shirley Street, and they will make all the provisions for you, make you comfortable, provide you with answer sheets and the examination questions, etc. So you can do your examination. The examination will be for 3 hours, the class time. Some of you may not need 3 hours. You might be so well versed that in an hour and a half, you might be out of there. If anyone leaves before an hour and a half, that's not good, unless like you're really super at it. But you certainly have the full class time to do the test. Remember, it's going to be definitions and short answer questions. And as you can see, the way the material is set up, the what can come as a definition or short answer question by now, I hope, is pretty straightforward to some extent for most students. Okay. And most of my questions outside of the ones of definitions going to be what's this, let's start, describe this, what are the components of that, what are the objectives of this. See, so it's not going to be an impossible dream. Once you do your preparation, you should be fine. There will be no surprises per se. All right. Any questions before we get started? Or continue, I should say. All right. If you think of anything before examination day, please send me a note and I'll be happy to respond. If you're studying and you get stuck on a thought, a concept, or an issue that you feel you'd like to clarify, just drop me a note and I'll be happy to settle the matter for you prior to going into your examination. But again, like I said, if you do your usual consistent, steady reading, studying, hard work as you normally do with any course, you should be fine. Okay. All right. Does anybody remember where we stopped last time? I believe it was unit 4.
Hold on, I have a question.
Question.
But not really a question. I just wanted to bring up the case study that was sent.
Oh, that thing. Okay, India.
You said it due at the end of the session, right? Now we do is read it and answer the questions, right? I just
Correct.
briefly glimpsed at it.
Yeah, that's basically it. There are some questions at the end of the case that you have to answer, and it is due on or before the last day of class. And if you finish before the last day of class, you're free to submit it. but you do have until the final day of class to submit. I wouldn't recommend that you wait until the final day of class. I would try and work towards maybe the week before so that you can have some room to just study for your final examination, and is what I would suggest.
Okay, quick question, excuse me.
Mhm.
The last day of classes, which day? The 28th of July?
Well, Mandy, you came up with my next question. Whoever has a calendar, tell us what the last day of class is.
I think somewhere around there, if I'm not mistaken.
At least one person has tried to work it out. Anybody figured it out?
Let me check the calendar on my phone.
Today is week number 5. So that means after today, we have 7 more weeks. What is 7 more weeks after today?
Sorry, it is the 28th.
Is that 7 weeks after today?
Correct.
Okay, July the 28th. Please make a note of that. That is the final day of class, which will be your final examination date as well. Okay, so that's quite a bit of time to work on your paper. Do not wait until the week before. Try to get it in the week before your final examination date, which is July the 28th, so that you can have a week, at least a week free, just to focus on studying and reviewing. Of course, studying and reviewing should always be an ongoing thing. You don't wait until you're getting down to D-Day and says, oh my God, I need to start studying. Then life becomes very miserable. And you start hating God and your children, your spouse if you're married, all that kind of stuff, just because you're pressured as time is running out. So try not to do that. Any other questions? If you think of any, just interrupt me. I have no problem with that whatsoever. All right. Anybody remembers where we ended the last time?
Audit techniques.
Audit techniques, yes. So this is actually unit 4, if I'm not mistaken. Our goal was to try to finish 5 units, which would include internal controls. Whether we'll get through the end of the 5th unit today, we'll see. But wherever we end today, that is as far as you'll be tested. So we end up in the middle of internal controls and the time runs out, then you'll be tested up to that point. And we'll just roll over the rest of it into the new session after the examination. Okay? So let's then look at audit techniques and see what's going on. I think last time we had a little talk about audit testing. And so now we're going to move into another part of the audit, which we refer to as audit techniques. And audit techniques opens primarily with something that we call test checking. Okay? Test checking. What is the meaning of test checking, anyone? I don't mind if you read it from your text, that's fine.
In-depth examination of few selected transactions.
Anything else before the full stop?
From beginning to end.
Yes, from the beginning to the end. So test checking then is, from an auditor's perspective, is an in-depth, not just looking over the surface at a couple of things here and there, but rather an in-depth, meaning a deep dive examination. But the deep dive doesn't occur with everything. All the sales slips, all the purchase slips, all the other documentation doesn't include everything. The deep dive is based on a few selected transactions that the auditor will use his or her judgment and experience to determine, okay, how many of these kinds of transactions we'll select, how many of those transactions we'll select, but whatever they select, they will dig deep into it to see if the company and its personnel are following all the policies and processes that they're supposed to be following. The idea is if they find a significant amount of violations that we're not following the rules of the company and carrying out the transactions in those selected groups, then that tells the auditor that by extension, you're probably not doing it with many other transactions. And so now the auditor has a dilemma. They have to decide, do they continue to look at more transactions to see if there are more violations, or just presume that the ones they found were the exception and not the rule. So you see, this thing about auditing is a lot of it is based on judgment as well, not just debits and credits and dollars and cents. A lot of it is based on judgment, using your judgment and your experience given the environment you're in. For example, if you go into an environment, you may not be totally familiar with it, but something that may go on in that environment that might cause you to think, I have an uneasy feeling about this. And so you have two choices to make: stay and see what the result would be, or get the hell out. Okay. And so that's a judgment call. That has nothing to do with your university degree and whether you're male or female and all this stuff. That's a judgment call by an individual. And so auditors make those calls all the time in terms of what they should look at, where they should stop, what they should continue to review, what they're suspicious about, who looks suspicious in the organization. Because sometimes an experienced auditor can walk into a firm and look at certain person and tell that they look suspicious for some reason. And if they feel that that might exist, the auditor might then decide they're going to do a deeper check than they normally would do. Because after all, why would you look suspicious? Is the person really suspicious looking? Not necessarily. But again, these are all qualitative, judgmental things that is not, you cannot put a number to it, a figure, a quantity. Okay. So I guess by definition, extension, we can say that the auditor's job is both qualitative, which are those judgment calls and intuition and experience, and quantitative, which is looking at the numbers, making sure they add up, making sure they balance, etc. Very intriguing work if you love that kind of work, this audit work. Some people love it, other people hate it, but either way, it's a very important function. The advantage that you guys will have, even though you may not all be auditors, internal or external, is that you have information on what the auditors will be looking for, what they'll be thinking about to some extent. And wherever you have responsibility as an employee, supervisor, or manager, this kind of information will encourage you to try to ensure that things are done correctly and properly, because now you have some inside information on how auditors think. And therefore, you can go ahead in your own work as an employee individually or as a supervisor or manager and try to get your organization to run as effectively and correctly as possible. That's the beauty of doing this stuff for persons who are non-auditors. For persons who are auditors, man, it's a glory time to remind yourself of your responsibilities and maybe add a few little things to your repertoire to help you do your job even better, for sure. All right, so it's an in-depth examination of a few selected transactions from the beginning to the end. It's a review of the entire flow of the transaction. Okay. In other words, from the transaction occurs to the recording of the transaction, the posting of the transaction, the preparation of financial statements, all the way to where the transactions end. That's what test checking is all about. Okay. And certainly at each stage in the test checking process, all the relevant records are examined. And the auditor will make a determination as to who prepared that stuff, who approved it, did they follow the rules of preparation and approval. If the policy said 3 signatures and it has 2, the auditor want to know why it only has 2. Why does all 5 of these that we pull out to look at have only 1 signature? Something is not following through. We need to check some more transactions to see if there are many more of them with 1 signature instead of the required 3 by the company policy. Okay? This is what test checking is all about. Okay? Very important part of the audit process. And the auditor wants to do this because the auditor wants to be satisfied that the sample of transactions that they're looking at in depth all pretty much follow the rules of the company, the rules of gaps and accounting, so that when the auditor makes a decision, makes an opinion at the end of the audit, they're satisfied that they have evaluated the situation as reasonably as possible. Okay? That's the whole idea. And the only way you can give a good, strong opinion that you're comfortable with as an auditor is if you've done some of this test checking to satisfy yourself that things are being done the way they should be done. Suffice it to say that test checking also involves meticulous work of what we call representative samples. We grab some samples, and meticulous means we trace the transaction step by step by step, all the way to the end to see if things are going according to schedule. Okay, for sure. Another part of test checking, it doesn't involve all the transactions. It just, again, involves a small number. What is small? Small is relative. Small compared to all the transactions that may have occurred that year. And again, you're reminded, whatever that number is, the checking is done stage by stage, so that the auditors, what we call quote unquote level of confidence, is sufficient to satisfy the auditor that the organization's functioning is satisfactory. Notice in point 5, the in-depth examination reconstructs the audit trail, meaning whatever verification, paperwork, signature, documentations, receipts, attachment, warehouse receipts, checkbooks, whatever documentation is supposed to be attached to these transactions, the auditor looks this to make sure that all that stuff is there. Okay? Or if they're not there, to find out why they're not there. And therefore, insist that the organization produce this information so the auditor can be satisfied that things are going according to schedule. Suffice it to say that a lot of organizations tries to hide information sometimes, especially if it's damning information. And auditors who are experienced enough or keen, they can pick it up. Do they pick it up 100% of the time? Not necessarily. Okay, window dressing, for example, remember we said it's hard to pick up. But a lot of auditors do pick it up because they have experience and they can tell sometimes when the management or the company is trying to avoid providing certain kinds of information and documentation to the audit. That is something that we should try never to do as an organization. But unfortunately, there are always a couple of board members, senior managers, middle managers, or somebody, maybe even a teller sometimes, who are trying to hide something, okay, for some reason. Some auditors come in with an open mind, some auditors come in with a very suspicious mind. But again, all of this is part of the audit technique, the topic, to get through the audit successfully, and making sure that on average, the organization is doing what it's supposed to do, for sure. Let's look at the example in point 6, where an in-depth audit of transactions walks through the entire process with regards to the purchase of goods. Let's say it's a merchandising firm, and the auditor walks into that firm and decides, great, my sample or my selection will be the flow of transactions for the purchase of goods for this multi-million-dollar organization. And because so much money is involved, we need to see and make sure that things are going according to schedule. All right. So the auditor would then have its predetermined information, all the way down to where we go, all the way down. Lots of things to look at just to confirm that the purchases are being done properly. And typically, the auditor will have these things already prepared to check. And so we start at the top. How do we go about verifying the purchase of goods during the entire year were done according to company policy and according to accounting practices? And so the auditor gets down with a cup of coffee and starts with A. And the question will be, where's the purchase requisition? Okay. Right off the top, is it pre-printed? Not written up as you go in some book somewhere. Is it pre-numbered so you can't change anything? And is it authorized in terms of the purchase requisition? How many signatures does the company require? If it's 2 or 3 or 4, the auditor will look to see if those signatures are there and compare them. If they're not there, somebody has to answer why. Okay? Secondly, in B, with regards to quotations, if there are any quotations that came up during the period, which is usually 1 year, the auditor will take those quotations and analyze them to see if they are reasonable and if they make sense. Again, any discrepancies that are found along the way, somebody will have to answer. C, the purchase order, do you have one? Are they sequentially numbered? 1, 2, 3. Are they authorized and are the approvals in place? How do you place the purchase orders with the suppliers? Do they follow company policy? Believe it or not, and the auditor will sit down all day or more if necessary to make sure that these things are being done correctly step by step. Because some people who's responsible for purchasing, they sometimes have their own little programs going, and which results in fraud and theft from the company if nobody's checking. Okay? So one of the primary reasons why the auditor will pick goods purchased to see if everything is going according to schedule. D, when goods are received, is there a delivery advice note coming into the warehouse, or the person in the warehouse signing off, the person who brought the goods from the dock area or the airport or whatever, are they signed off to say they bought it? Or somebody signed off to say they received it? Are they attached to the receipt of goods document as it should be? Okay. When goods go into the warehouse, who verifies it? Who checks the quality and the quantity of the goods? Who signs off to say that they've checked to make sure that nothing is broken or destroyed, and that if you ordered 5,000 units, that 5,000 units came in? Very interesting stuff. And if you're not checking, people will always find a way. People sometimes find a way. Why are you checking? Goods coming into the store, is there a record of them? Where the suppliers' invoices kept? Suppliers' statements kept? Are the statements up to date? Do we keep them filed correctly so that if we have to go back and check for some discrepancy, we can find them? Okay. Who's responsible for approving the purchase invoices with regards to specs and quantity and quality of goods ordered, etc.? Who's that person or persons? Who enters goods transactions in the day book to record the purchase? Certainly, it should not be the person who brought the goods to the warehouse. Certainly, it should not be the person who ordered the goods. It should be somebody in the accounts department who got the transactions from the purchasing department and goes ahead and makes those entries in the purchase day book. Okay. Usually, when we purchase for cash in accounting, we debit an account called purchases or inventory, and we credit an account called cash. And so the auditor will look to see if those are the basic entries that are being made, making sure the correct account is debited and the correct account is credited. As opposed to if we purchase goods on credit, then we have a different transaction entry to look for. Goods purchased on credit is a debit to purchases, a credit to accounts payable, meaning that the company owes the supplier money because they're purchasing goods on credit. And the auditor must and will and should and will want to look at all those goods that are purchased on credit to make sure the transactions are properly recorded, that they're going to the correct account. Okay. It's not an overnight affair. So when you see them deep down and papers hanging around, they're not just wasting time. Okay. They're doing all these things and 10 times more. Once the transactions are entered into the day book, somebody should be responsible for posting them to the ledger and what we call control accounts to make sure they're properly recorded and posted. And then, of course, we have the payment side of things, making sure that the invoice is paid properly, invoices properly where there's a discount, that the payment is net of the discount. Auditors will checking for all of this because sometimes people, employees, if they don't think you're checking, they will start manipulating the system. And persons who decide to defraud and manipulate, they happen to be ingenious in what they do because they practice and they watch the process for a long time and they're very familiar with how it works. Okay, so they know oftentimes how to get around it. Okay. Cash payments, cash transactions must always be down to L, be accounted for, verified, and deposited in the bank, posted to the cash book in the company records at all times. They should be kept up to date. They shouldn't be lagging behind postings for weeks and weeks and weeks. And then you lose track of what transactions occurred, where they should go, and basically maybe in some cases fail to post at all, which of course would result in an inaccurate cash account total and an inaccurate balance sheet where the cash account is sitting. Because of course, if one ledger account is incorrect, then the entire balance sheet will be incorrect. Okay. So, welcome to the auditor's world. And that is just the tip of the iceberg in terms of the things that they may test as part of their audit technique program. And again, these are all different techniques that auditors use in order to verify transactions and satisfy themselves that when they give an opinion and say the financial statements are good and fair, that they're satisfied they've done enough checking to support that position. Let's not forget, as a reminder, test checking again means to select and examine. So if I were to ask you, what is test checking? And it's right there. To select and examine a representative sample. Now, if you forget to put representative, you just put sample, that's fine. From a large number of similar items. Okay, that's test checking. Notice the items have to be similar. Okay, that's very important because similar in the sense that they are the same in characteristics. So if there are 100 of them and you test 10%, that 10%, if all of them are done properly, then the auditor will assume that the other 90% are done properly as well. Sometimes, not always. Okay? Hence the reference to similar items. Notice we are told that test checking is an accepted auditing practice. Some people still think for some reason that auditors should be checking every single transaction. It's not practical, nor does it make sense. The auditor will never leave the room. They will never leave your organization. They'll be there all year round if they have to check every single transaction. So what did we come up with? Test checking. So we grab a good sample, check it in detail, and form an opinion about the rest of the items in that particular batch. All right, so having said that, we now come up to what we call a nice word called salient features. Anybody has access to Google? Who has access to Google on your phone or somewhere?
I do.
Okay, great. Why don't you look up that word salient and tell your colleagues what that means? The salient features.
Sorry, you said the word was
Salient.
Noticeable.
Okay, noticeable, yes. The noticeable features. Any other description? That's the only one that Google gave. Noticeable.
Important.
Yeah, important features, of course. Okay, absolutely. That's enough. Give you an idea. So the important or noticeable features of test checking are the following. All right. So when you hear that word salient again, it has nothing to do with salt. I had a student one who thought it was salt because it says salient like salt, but in a way, I guess it's like salt because salt gives character and taste, and makes and pronounce things and make them more delicious, I suppose, if we do it right. So the important features, all right. Nice word to use if you are in a meeting at work and they ask you to comment on something and you can just stand up, and if you remember that word, you can say the salient features of this particular situation and this organization are as follows. And then, damn, never heard of use that one before. Okay. So what are the salient features of test checking? Well, there are a couple of them. 1, 2, 3, 4, 5, 6, 7. Okay. Typical exam question lists a couple of the salient features. An examiner could ask that because it's so important to the audit process. And they're not hard. Or I might say describe 2 or 3, or describe the following salient features, and the examiner might give you 3 of them, like scientific estimation and coverage, and just say describe them. Now, describe doesn't mean you have to remember them word for word, students. Describe means that you can give a brief description that tells the examiner that you understand what you're saying. Doesn't have to be word for word, for sure. Okay? So what are these 7 salient features of test checking? Remember, what is test checking again? Anyone? By definition?
Tax tracking is an in-depth examination of few transactions from beginning to end.
Absolutely, absolutely. An in-depth review of a few transactions from the beginning to the end. Couldn't put it better myself, and that's all it is. Okay. All of a sudden, it's not so mysterious anymore. All right. Feature number 1, that it's, and it could be scientific in nature. You're not really here to get into all the scientific details of this particular feature. What you want to be familiar with is that there is a scientific approach to test checking. There is a mathematical approach to test checking. There are some statistical theories that apply to test checking. And for those auditors who want to be bothered, not all auditors use the scientific approach. Trust me on that. Some of them don't even know what some of these statistical theory of sampling are at all, or they did a little bit when they were in university preparing for this, so they don't remember anymore. Because oftentimes, depending on the audit firm and the audit, a lot of this stuff scientifically will not be used at all. But it is available for those audit firms who would like to rely on some scientific approaches to help them conduct this testing. Why is the scientific approach so important? Because it uses very structured numerical step-by-step processes to help with the testing process, as opposed to what we call using arbitrary techniques, which are not necessarily based on any particular theory. Something that the old thing we call our gut feeling. Some auditors still use a gut feeling, but a lot of times the gut feeling is tempered with good judgment, experience, some combination of the two, which have nothing to do with the scientific approach, anything statistical in nature or any of that stuff, but it has to do with how they have conducted previous audits many, 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 many times before, and pretty much they can use their judgment and experience to help them with the selection process rather than the scientific method. Then we have the estimation process. Okay. Notice we are told test checking and sampling can never bring complete reliability or even give accurate results. That's for sure. It is an estimation only. And that's important to know. Nobody's perfect, and therefore the auditor is not perfect either. And there are certain things in the audit that the auditor cannot make perfect, no matter whether or not he or she may want to. Life is just not that way. And then the auditing process isn't either. Okay. test checking by its very nature means that you're not checking 100%. That already suggests that it's not perfect, and the process that you use to look at the sample to test in depth are really an estimate only. Is it subject to error? Of course. The auditor must try to determine, okay, there might be some errors. What level of errors am I prepared to tolerate? And they will proceed based on that judgment call. Notice we are told very specifically, usually under the estimation process, matters under examination tend to be a matter of the individual judgment of the auditor in that area. It's just like if a heart surgeon is doing an operation and something happens to the heart unexpectedly that the surgeon may not have seen before or may not have had a lot of experience with, but they do not have enough time to call another surgeon to have a look and have a long talk about it. So now the surgeon has to make a judgment call. And auditors do very much the same from a financial perspective. Okay? Can you teach good judgment? No. Most of us have to develop our own judgments as we go about our jobs and we grow in our jobs, whatever job it is, including the audit's work. Okay? What about number 3? Test checking covers material items. In other words, again, it doesn't cover everything, but it tries to cover those large amounts. So the sample might be consisting of transactions in the millions of dollars as opposed to the thousands of dollars, because millions are more material in amount, more substantive in amount than thousands. If it's a smaller company, they'll consider the thousands rather than the hundreds, and so on. Okay, to try to cover as much as the material amounts or the larger amounts as possible. And by verifying them, they determine that, okay, we verify most of the major transactions or a good deal of them. It means then that even if something goes wrong outside of this, it cannot affect the organization significantly. So that's how we come up with the material items cover from the test perspective. So far, test checking has the following features. It could be scientific, statistical in nature. It can, obviously, it's an estimation process. And then it tends to want to cover material items, significant amounts. Then comes full coverage. What does that mean? What does full coverage mean? Anybody look at that? Full coverage, or you just said, man, full coverage, I'm not reading that. What do you mean by full coverage?
May check in all transactions from beginning to end. I don't know if it'll be a selected period, like how they normally do, but I guess 100% check on whatever period you select.
Well, certainly the checking part of it is relative to the full cover concept. The only part that is not relevant for test checking is that we know for sure now that it will never be 100%. Remember, test checking is just checking a sample, which is not going to ever be all of them. Okay, but certainly in terms of the full cover concept, it is certainly referring to the audit and its program in terms of what are the auditors going to do if they come in to do that audit for 2 to 3 to 4 to 5 years. Are they going to use the same methods each time? Are they going to change it up? Are they going to change it in relation to the size of the company? Notice the example they give that, for example, if in 1 year, the months of January, June, and December are checked, April, July, and September may be checked in the second year, and so on. In other words, over a period of time, especially if they know they're coming back for 2 or 3 years, then what they might do is do a full in-depth check of 2 or 3 months in the first audit, and then the other 3 months in the second audit, and so on until they do an in-depth check of everything in different months of the year over a period of a couple of years. Okay? So in other words, even though the concept might be test checking samples over time by checking samples by months or quarters, we can eventually, if the audit is going to be there for that long, couple of years, end up checking all types of transactions, covering everything pretty much, which I think actually would cover that 100%. I let me just give you credit for that. It does get eventually to 100%. All right. I shouldn't say that it never covers 100%. Typically, up to 3, it's never going to be 100%. But if you have a full cover situation occurring over time, then yes, yes, your answer is absolutely correct. You can end up covering 100% of the checks. Okay. You're just doing it at different times each year. For example, as I said, you cover January to June in 1 year, and then April, July, and September in another year, and then another 3 months in another year. And eventually, if that can happen and does happen, you do eventually get to 100% of checks. Okay, so that's an excellent observation. Without actually having them put 100% there, that you picked up on that. Who was that? Who said that? Mandy, that was you?
Yes, sir.
Very good, very good. Okay. All right. Then, of course, we have the element of surprise. Anybody knows about that from auditors? Anybody ever had a surprise audit? No? Where do you guys work? Has anybody in this class ever been a part of an audit?
No, I haven't been a part of one, and we haven't had a surprise one because, like you said before, we know that the audit was coming because
Right.
it's done every year.
Yeah.
So the only thing I could say is like maybe surprise teller checks or something like that. I don't know if you can consider that the internal auditor doing a surprise audit.
Absolutely. Internal audits should be doing surprise audits all the time. As a matter of fact,
We call it spot checks.
yeah, absolutely. As a matter
For
of
things
fact,
like petty cash and stuff like that.
definitely. Wherever there's cash, you better be checking that regular because people like to run off with cash and say they're gonna put it back and never put it back and put it back later and put it back later and take more and more. Cash is the most liquid asset, and whenever it's not in the bank, you have to keep constant checks. Even when it's in the bank, you still have to do monthly reconciliations and checks to make sure that nobody's running some program to get some of it out of the bank through fraudulent checks and fraudulent transactions and all this kind of stuff. Okay. So yeah, the surprise element is an excellent source for auditors to see if persons are doing their jobs as required. Usually if people know the auditors are coming and they're doing something untoward, then they could fix it or try to fix it before the audit is done, whether it's internal or external. So the surprise audit has some of its benefits. In this example, the surprise element refers to the auditee. Who's the auditee anyway? Or is there such a thing as auditee? That's a funny word. Auditee company? What is that?
The company being audited.
Yeah, the company being audited. Absolutely. All right. As far as the surprise element is concerned, the company being audited under the surprise element should not be able to know, just as we said. In this case, the pattern of the test checking. See, remember we said test checking could be a sample, it could be done quarterly in rotation, all kind of different methods. One thing the auditor wants to be careful with is trying to make sure that the persons who work in the company do not become aware of their sampling patterns. Because if
I have a
people,
question.
yes,
With the surprise audit, who determines like when the auditor comes? Is it the auditor's decision, or like does the people who pay the auditors be like, okay, well, we prefer to do surprise audits than for you to come like quarterly also?
well, what would happen normally, typically for an external audit, they are done once a year. And therefore, the board of directors, typically the ones that will authorize the audit, and make arrangements and discussions with the auditor as to when the auditors will come in. Usually, if it's not a surprise audit, the management, the supervisors, managers and supervisors will be made aware of when auditors are coming in, and so everybody tries to get ready for the auditors, so to speak, as much as possible. Okay, that's for that annual audit. Now, if the board of directors decided that for some reason they want the annual audit to not be known as to when the auditors are coming in, then the board will not tell managers and supervisors. They will simply set a time with the auditors, and the auditors will just walk in. Tell everybody, shut everything down, stop doing what you're doing. We're going to have a cash count. We're going to check certain things within the organization to see if the basic stuff is in place. Then we're going to begin the full audit. Okay, so that is usually done in management's discretion, whether it's going to be a surprise or not. For sure. All right, that's a good point. Then there's the question of flexibility. Test checking, you have to be careful. It could become a routine thing, especially if the auditors keep coming back year after year. People become familiar with the auditors. They become friendly with the auditors. The auditors start using methods that staff begin to understand. And so when the next year rolls around, staff has an idea what the auditor is going to do now because they know the methodology. They talk to them, their buddies, or whatever it is. And so now staff can make certain adjustments that they normally would not be able to anticipate, such that the auditor will not pick up on certain things that they normally should pick up on. Okay, and so the auditor's testing should be flexible and changing at all times. Every year they should come in with a different sampling method, a different estimation method, a different, and in some cases, in any period, a surprise audit cannot hurt. But again, surprise audits externally have to be agreed with the board, and internally, the internal auditor doesn't necessarily have to get board approval to conduct a surprise audit. Okay? Internal auditors should be doing much more surprise audits than external auditors, for sure. Because the more staffers don't know when the internal audit is going to come, the more they should be interested in doing the job right every time, so to speak. Okay? 7, and finally, test checking is judgment based. There's nothing, it's not only scientific, but it's judgment based or qualitative. So there are no hard and fast rules. They're just attaching experience to the situation, attaching the auditor's judgment, which is based on experience to any particular situation to see, whether things are working properly or not. And so this judgment thing cannot necessarily be taught. Sorry, I can only say to you that judgment is acquired over time through knowledge and experience and practice, okay? As it is with everything else, typically of this nature, where we have to exercise our judgment. Okay? Remember, there's some things in life that your calculator or your numbers will not help you with. Okay? So if you're dating a guy, he's a schizophrenic person, no amount of calculations and budget discussions and where do you work and how much you make will help you to determine that that person is a schizo. You may have to use your judgment based on your conversation, your observation of their behavior. See, none of this is quantitative in nature. These are all qualitative based on your judgment. And then you might decide, you know what? I'm giving this date one more chance, and if I see these behaviors exhibited again, that's it. I'm changing my number. That's a judgment call. Okay? Does that mean you're correct every time? Absolutely not. Sometimes you make an error in judgment, but you have to make a judgment call. That's the key. All right. So then when we're making these judgment calls and these test checking features are being considered and all the different options that are available to us from 1 to 12, which we can use individually or together, or some of it, or all of it. Again, every auditor will use a different approach when they're doing this stuff. However, there are a couple of key things that every auditor should consider. and decide upon whenever test checking and sampling are going to be done. Some key things. And what are those key things? First, consider the size of the organization that you're going to audit. It will make a difference in your approach, whether it's a small, medium size, or large or gigantic organization. And so therefore, the size has to be considered so you can determine what you're dealing with and how to apply your test checking techniques. You have to also, as an auditor, consider the state and the efficacy or the substantiveness or the completeness of the internal audit. Internal controls. If the internal controls are weak, it doesn't give the auditor a lot of confidence. They therefore may have to end up doing more sampling, more in-depth work, and staying there longer and costing the company more. But if they look at the internal control process, and generally after testing a few internal controls, they see that it's working, then the auditor is more than likely to have a greater confidence, select a smaller sample to do the in-depth test checking, and therefore get out of here sooner rather than later. Okay. Another important thing for the auditor to consider is the reliability and adequacy of the financial records. They pick up a couple of them and they turn out to not be correct. They add up some balances and the balances are wrong. They look at some transactions and transactions are posted incorrectly. Some items that should be under assets on the balance sheet are sitting under equity or liabilities and vice versa. Then the auditor knows that something is very wrong with those financials, with that general ledger. Okay? And therefore, they're going to seek now to use that as a basis for determining whether or not they need a larger sample to do further checks and deeper checks than they had originally planned. And then, of course, we have the error range, or the range of error for the auditor to consider. Another judgment call. Some auditors say they're satisfied with a 3% range, 7% range, 10%. That's all well and good. Some people even question, like, how do you come up with a 3, 5, and 7, and 10? And whatever it is, it's going to be subjective. It's not going to be a hard and fast mathematical formula, but only, again, an estimate of the range of error that the auditor is prepared to tolerate. So in other words, the auditor decides, I want my error range to be no greater than 5 to 10. And then they do a couple of samples and they find that the errors take them somewhere between 10 and 20 or 10 and 30 in that range. Then the auditor knows, hey, this is way out of the range that I anticipated. I need to do some further checks, ask some more questions, satisfy myself some more, because I'm not comfortable with the range that I set. It's way above my estimated range. And then, of course, let's not forget the confidence level. If a company is known to be honest, full of governance, full of integrity, the board is basically honest. They don't try to get away with compliance issues and legal issues and staffing issues, etc. Then all these positive things, if all the government taxes are paid up, they're not talking to anybody about avoiding and evading taxes, whatever the case might be. All of these things are positive in the auditor's sight, and it helps the auditor develop greater confidence in how the organization is run. Of course, if any of that stuff is opposite and comes to the auditor's attention, confidence will go down and more time will be spent auditing, especially if the auditor has to give an opinion as to whether the accounts are true and fair. Okay? Remember, people like to blame auditors, period, for everything. To some extent, they should be blamed, but they cannot be blamed for everything, for sure. All right. So, when do we use test checks? That's a reasonable question. When do we use test checks? Well, there are 1, 2, 3 occasions when we can use test checks. One, when we consider the volume of the transaction, where the transaction volumes are large, hundreds and thousands of thousands per day even, then test checking is definitely something to consider. Okay? When the volume of transactions are large. Then we have to consider the time factor. The auditor cannot stay in your firm all year. Some of them can't even stay beyond 8 weeks. There are many, many other engagements. Time is money. So they have to consider the time factor, and that time factor will drive a typical auditor to do a lot of test checking. Because again, as we said, 100% is impossible, and attempting 100% is foolish, especially if it's a large firm. Okay? Then, if we have what we call identical transactions, homogeneous transactions, then we want to do some test checks to make sure that everything in that group that are the same, we're applying the same techniques, the same practices, the same rules to everything in that group. And then, of course, we have finally the internal control aspect of things. As I mentioned earlier, whenever the auditor is satisfied with the internal control system of the company, whether it's manual or computerized, they tend to have a greater confidence in how the transactions are handled, and therefore they may not spend as much time rummaging through transactions, so to speak. It will take a couple, but they say, hey, the internal controls in here are great. People are checking people, everybody's checking each other and watching each other, and there are cases where when people have been reported for violating the rules, etc. The internal controls in here are pretty great. So I don't need to do as many checks as I plan to do if the internal controls were not great. Okay. Notice, doesn't matter whether they're manual or computerized controls. The key is to have some of them in place and to ensure that staff are actually following the rules. Now, do test checking activities have any advantages? Yes, they do. Do they have any disadvantages? Yes, they do. Okay. Luckily, it appears not really. Looks like there's no difference between the amount of advantages and disadvantages, interestingly enough. Seems to be the same amount on both sides of the fence. But let's look at them quickly. Advantages of test checking. Well, we're told right away that test checking can be an objective that is established for the auditor to form a satisfactory opinion on financial statements. Remember, we are told that even after 100% checking, even if that was possible, the auditor may not find absolute satisfaction because there's always the thought in the back of the mind somewhere that they missed something. Okay? So therefore, the plan is to set the audit objectives to carry out proper, careful testing and satisfy itself that that is sufficient. The goal is to obtain what we call reasonable audit assurance, and that means collecting a deep sample and then doing a deep dive, checking all the details, checking the internal controls to see if they're strong enough. If those things are working well in the firm, then that would be considered enough information to meet the reasonable audit assurance requirement. Of course, the auditor that comes in and does none of those things to any great extent is certainly not the auditor that you want. And there are some auditors who might attempt to do that, especially if they have other jobs pending or waiting. They want to get to the millions of dollars that are waiting for them, and therefore they don't want to spend too much time in any particular place. Okay? That could turn out to be an unfortunate situation because the auditor might then start taking shortcuts, take greater risk, and not consider all the judgmental issues that he or she needs to consider. Expertise is the other advantage. So test checking involves the application of the mental capacity of the auditors and, as we said earlier, judgment. We've added an additional word here called intelligent judgment, and that is just what we call good judgment, because there's intelligent judgment, which is bad judgment, which we need to stay away from. And so the auditor has the opportunity to use his expertise in this area in order to make the review process as complete and sufficient as possible for the auditor to draw conclusions as to what's happening in particular areas of the company. Then there's the exception principle. What is the exception principle? We are told it's simply when certain areas of the internal control of the organization, because they do not create any suspicion, there's no need to verify all the transactions until you fall down dead. Okay? The text uses the word exhaustively. Okay? If certain aspects of internal control are in order, they're working, you test them, they do not create any suspicion, then there's no need to verify all the transactions in any particular area of the company. That's what we refer to as the exception principle. Of course, the reverse is true. If the auditor finds that internal controls do create suspicion, then what are they going to want to do? They're going to want to do some more work, more checking to see if anything else sneaky is going on. Okay? Another advantage, the assessment of risk can be done scientifically, if necessary in some cases. Some auditors use what we call samples in terms of trying to study the overall problem with the rest of the items. Some part of that process is considered to be a scientific assessment in terms of how you gather data, look at it, assess it, analyze it, and say, hey, is this a good representation of everything else in this particular group of items? Okay. So you do have that element of the scientific assessment available as an advantage. You don't have to rely 100% on gut. That's really the point. It saves time. You don't have to go through everything. For sure, not having to do 100% check on everything in every organization that you audit is definitely a game changer. This allows auditors to even complete the audit, verify all the necessary procedures, and what we call a timely manner. Now, a lot of people, including board members, have their own interpretation of timely, but at the end of the day, we have to be satisfied that the auditor is doing the job that they need to do in order to give our company a clean bill of health. And so sometimes some time might be lost, as it is in most cases. But the greater good is at hand, and that is making sure that the financial records presents a true and fair view of the company. And then the final advantage is the reduction in the workload. Clearly, if you're just analyzing samples and details, you're not looking at everything, clearly your workload is going to go down. When your workload goes down as an auditor, you tend to be more productive with the ones that you're working with and be much more efficient in getting the information checked thoroughly so that conclusions can be drawn with regards to the outcome of the auditor's check on those samples. Okay. So all of those are examples of the advantages of test checking. And of course, again, it's an exciting time for examiners. Examiners love stuff like this, to ask you questions like, describe 3 advantages and 2 disadvantages of audit testing. And again, remember, you don't have to do this thing word by word as it is in the text. If you can summarize, if for those of you who have photographic memories, not a problem. Let it rip, do it word for word. I don't have a problem with that. But for those of us who don't, you don't have to know it word for word. You just need to be able to understand the basic fundamental aspect of each advantage or each concept for that matter. There are some disadvantages we were told to test checking. The first one says that test checking can be naive and biased. That's interesting. What does this mean? Well, the extent to which test checking can be resorted to is a matter of the auditor's personal assessment, which is true. It does not ensure the selection of representative samples of adequate size. That is true. And offers opportunity for bias on behalf of the auditor to enter into the selection process. That is true, unfortunately. Because the auditor may not like auditing a certain type of product or thing, they might decide to take a shortcut, or they might decide to take a smaller sample, or because they're biased towards not trying to ensure that, say, the board is satisfied with what they're doing. Uh, Clearly, all these kinds of biases can get involved in the selection process and affect what you normally should be doing. Okay? That's why, for example, organizations do not like relatives, especially spouses and in-laws and sisters and brothers, etc., to work within the same firm. And if they do work in the same firm, certainly not in the same location. One of the reasons for that is, people can be biased and start making decisions in favor of their relatives or friends or whatever. And clearly, we know what that problem is. But outside of that, the auditor is making a personal assessment with these tech checking samples. And so the auditor has to make sure it doesn't fall prey to any of these disadvantages. Okay? Non-authentic is another disadvantage. Saying test checking lacks authenticity, meaning it doesn't have anything which you can verify mathematically, tested with precision, because again, it's a judgment call based on some oftentimes an arbitrary sample of goods to test them to see if they actually the process is actually meeting the standard. Because that is so, sometimes this issue of test checking is referred to as unreliable, but it's a practical process for auditors, especially when they're auditing large and mega firms, even medium type firms. Okay. If you're auditing a small little business somewhere, sure, you can do 100% run on that. That won't take too much time. But if you work for a big company and a bigger company, an even bigger company, then it becomes more difficult for the auditor to do those things. Higher risk is another disadvantage. The risk that a material error may occur, meaning despite all the checking, a major error might have occurred by a staff or even an auditor in conducting the audit might make an error. And so there's the risk that information could be undetected. Nobody's perfect. The auditors have already said that they can't catch everything potentially, but they are looking to see if they can catch whatever they can catch. And whenever they do, they have responsibility to report to management. This higher risk that we're referring to is called what we call audit risk. Okay? The amount of risk that exists for the auditor in conducting the audit. And then, of course, we have the unscientific disadvantage. There's no science to it. It's all arbitrary. Many people see that as a disadvantage. Collecting samples of transactions for many people does not give the full picture. You're telling them that you cannot find the time to do 1 million transactions. Nobody's listening, depending on who they are. Somehow they still think that the auditor should be looking at every single thing. And so, since it's arbitrary, since it's coming from the gut and experience, practice, and all this kind of stuff, then persons refer to the testing method as unscientific, which it is. Okay, there's no number base, there's no set of number standards. Just pretty much take your experience and go out there and grab what you need to grab based on what you see, test it, and make a judgment call. Of course, there is the disadvantage of what we call the difference in activity levels, where, for example, activity levels may vary in a particular year or particular month during peak productions, etc. The auditor cannot draw what we call reasonable conclusions because of the variations in activities throughout the year, and therefore it makes it difficult for the sampling concept to be properly applied. Okay? That is considered a disadvantage. So you have an equal amount of disadvantages as you have the advantages, which is an interesting thing about this test checking. testing, test checking. And so it's kind of a 50-50 situation in terms of those who agree and those who disagree. But nevertheless, it's an effective tool for management, sorry, for auditors to use when they're conducting audits, especially of large companies. You cannot even hope to get to all the transactions. All right, for those of you who got this far, and I hope you did, and further, this chart that I put here is to kind of give you an idea of the difference that exists between test checking and what we call routine checking. You will discover that they are not necessarily the same, even though they both have the name, they both have the last surname, checking. They don't have the same first names, and so they do have some differences, in some cases significant. All right. Okay, man, that's enough talking for me. I need somebody to jump in and help us to bump along. Okay, who did not read last week? Let me start there. So I don't pick somebody who read already. Who did not read last week? Everybody read last week?
I think I read last week.
Yes, you did. I'm looking for a volunteer who didn't read last week.
Between my baby making too much noise, Mr. Wilkinson, I can sit this one out today.
Yes, you are exempted by all means.
Yes.
Absolutely. Okay. Boy or girl again?
I'll volunteer.
Boy.
Okay. Okay. Who said that? Who said I'll volunteer?
They know.
Okay, Danielle, that sounds good. Before you begin, Danielle, I just want to say to Rosalie that whenever she gets tired of, what's his name, Rosalie?
His name is Ron, but we call him Frosty. Right now, he pulling me to get him some food.
Good. Whenever you get tired of Frosty, you can just give me a call. I'll come and pick him up and let you sign the papers because I'm not giving him back.
No problem. No problem. I come from on the weekends.
No. You cannot get him back. I'm not. I'm already planning his future. So you could come and say, call him and say hi or something. But enjoy. Okay, that's the best of them ever, despite all the blah blah blah. All right,
Yes, sir.
Danielle, let it rip. Well, first of all, Danielle, you volunteered at an interesting point because we're now looking at this chart, and that's okay because since you are an audit thinking person now, this kind of chart will not spook you. You just says, okay, I'll just deal with it systematically, just like an auditor would. I'll go from the first column to the second column to the third column, and eventually I'll be done reading this chart, and then I can move on. See, that is the structured thinking of an audit person. All right, so Janelle, this chart is looking at the differences between, or the similarities and differences between test checking and what we call ordinary checking, which is what most of us do, ordinary checking, routine checking. The auditors are the ones who have this fancy checking called test checking. And so let's see then, in terms of the different particulars, going down the list, we'll read each particular at a time, from left to right, to see how the audit testing process differs from routine checking that we all do in our jobs from time to time in one form or another. Okay, Danelle, beginning with particular meaning.
Test checking versus routine checking. The meaning. Test checking is an accepted auditing procedure wherein only a part of its transaction is checked to form an opinion instead of checking all the transactions in external auditor. Routine checking. Routine checking is the detailed checking of all transactional aspects such as cast, subcast, carry forwards, extensions, and calculations, etc. In subsidiary books, checking of posting into the general ledgers, casting of ledger accounts, and extraction of their balances, internal auditor.
Okay, interestingly enough, before you go on, then I hope you guys see right off the top in terms of the meaning, test checking looks at what? A sample, and then the details of that sample. Routine looks at what? All transactional aspects throughout the organization. So typically, your auditor will be the one involved in test checking, and typically your internal auditor, sorry, external will be involved in test checking, and your internal auditor is more than likely will be involved in what we call routine checking. Okay, so we have an application process kicking in right away. Okay, keep going, Dino.
The objectives. Test checking to obtain a reasonable level of satisfaction about all transactions, but verifying a few representative transactions called samples. Routine. A, to verify the arithmetical
Yeah,
accuracy of
arithmetical. That's the tongue twister.
arithmetical accuracy of the entries, to verify the accuracy of posting to ledgers, to check that the ledger accounts have been correctly balanced, and to ensure that no figures are altered after checking.
See that? To ensure that what? No figures are altered. Imagine that. There are some people on the jobs where people work who, for example, who work in accounts departments or some such. And it doesn't even have to be an accounts department, it can be a teller area or anywhere area where transactions and cash and numbers are being done, who actually will go behind if they're thinking about doing something nefarious or fraudulent, who go behind the checking thing and alter numbers. Imagine that. Do people really go that far? We didn't put it here for our health. They certainly do. And you'd be shocked sometimes who the persons are who will do it. And that's one of the reasons why I put this in here so you can see, you know, not just from an auditor's perspective, just from your normal day-to-day jobs that you do. Okay? A lot of times, if now, hopefully you'll be thinking a little bit like an auditor, but, and that in itself will help many of you, depending on whatever jobs you do, wherever it is. Okay? To do things a certain way, to look out for certain kinds of things, to become aware of something suspicious, all right, and all this kind of stuff. And certainly, most of all, if you're thinking about doing something yourself, you say, wait a minute, I'm not doing it. Okay, I'm gonna run out of gas first or borrow the money. All right, keep going, now.
The advantages of test checking. It saves time. Proper and careful test checking is helpful and serves the audit objective. The volume of work is reduced. Time available for other audits. Advantages of routine checking. Checking of posting and ledgers. Arithmetical accuracy can be checked. Trial balance tallying is facilitated. Easy detection of errors and fraud. Delegation of audit work to junior staff.
Question. Let me ask you guys something. In D, why do you think that the routine checking makes it easy to detect errors and frauds? Anyone?
Because it's more checked in detail of every item.
Absolutely. You're checking more detail on every item and you're checking it what? Regularly. Absolutely. Absolutely. Okay, keep going.
Disadvantages of test checking. Client staff may become careless. Some errors and frauds may go undetected. All items and transactions are not checked. An element of doubt and risk is present in the auditor's opinion. Disadvantage of routine testing. Highly mechanical process. Monotonous activity may lead to boredom. Major items of fraud and high-level intricacies and complexities may not be revealed. Compensating errors and errors of principle will not come to light.
Indeed. So there you go. My goal is not for you to grab all of this, some of this maybe crazy accounting perspectives and so on in terms of what some of these things mean, but some of the aspects of the test checking work versus routine are very routine, very straightforward. And so I just want you to understand the basic concepts of the relationship between test checking and routine checking within the different categories. Don't worry about when you're reviewing if you don't remember this crazy stuff about carry forward, errors in principle, and all that stuff. I'm not going to stress you with having to remember all of that accounting detail. I just want you to have a basic understanding that there is a difference between test checking and routine checking um, within the processing of transactions, and for you to have a basic understanding of, of how that works. Okay, for sure. More importantly than the test question, which will probably only be a question if it does come up, is that you become aware as at this evening, of the existence of these things from an external auditor's perspective, which is the checking side, and then the kinds of things that your internal audit people should be looking at, or whoever's responsible, or even your accounting department if you don't have an internal audit department, who should be looking at these routine checks on a regular basis. The organization itself can only benefit from this kind of stuff. Okay? And again, if the more staff members that are aware of this, the more accounting people that are aware of these things, the more effective the organization will be run, and and everybody typically will be a little bit happier. Okay. All right, keep going. You know.
Audit sampling, meaning the purpose of this auditing and assurance standard is to establish standards on the design and selection of an audit sample and the evaluation of the sample results. This AAS applies equally to both statistical and non-statistical sampling methods. Either method, when properly applied, can provide sufficient, appropriate audit evidence.
Okay. Keep going.
When using either statistical or non-statistical sampling methods, the auditor should design and select an audit sample, perform audit procedures thereon, and evaluate sample results so as to provide sufficient, appropriate audit evidence. 3. Audit sampling means the application of audit procedures to less than 100% of the items within an account balance to establish the characteristics of the items selected in order to form or assist in forming a conclusion concerning the entire population. 4. It is important to recognize that certain testing procedures do not come within the definition of sampling. Tests performed on 100% of the items within a population do not involve sampling. Likewise, applying audit procedures to all items within a population, which have a particular characteristic, for example, all items over a certain amount, does not qualify as audit sampling with respect to the population examined, nor with regard to the population as a whole. Since the item were not selected from the total population on a basis that was expected to be representative. Such items might imply some characteristic of the remaining portion of the population, but would not necessarily be the basis for a valid conclusion about the remaining portion of the population.
Now, it's interesting that paragraph that she just read. It's what we call a very convoluted paragraph. In the Bahamas, we call it a Gussie May paragraph because it is so expanded. But let me just ask, just to see if anybody is still thinking straight at 8:08 in the evening after all the work. What do you think this paragraph is saying in general? After all that stuff that Danielle just read in 4, what is that saying in general? What did you gather from that from this paragraph, generally speaking? No right and wrong answer particularly, just let it rip. What do you gather from it? Or you just say the hell with it, there's too much crap in that in the first place. Anyone take a stab at it? What do you think that paragraph is trying to say?
I'm assuming that it could mean that if you're not using, or even though you're not using all of, when they say population, they're referring to the items or the transactions, right?
Yeah, in a particular category, yes. The
In a
entire-
particular category.
let's say, for example, all the sales, that would be a population for sales.
Right.
Go ahead.
So when you use this particular sample, they are basically implying that this should be correct for the rest of the samples in that particular category.
Indeed. And here's, okay, so that's kind of like 70% of what the paragraph is all about. Basically, if you're going to use a sample to do your audit testing, the sample should be a random sample of the entire population. Then the sample is said to be a proper sample that is representative of the whole. And that's what she's saying. That's about 70% or more of the answer. The other little part in that big old fat paragraph is this part, where if you take the population and say, we're only going to do a sample of balances over $1 million in this population, then we do not regard that particular activity as a sample activity. Whatever we look at over $1 million in that population is not considered a sample. Okay? It is only considered a sample when you take a sample from the entire population. If you say you're only going to look at those balances over $1 million, that's not the entire population. True? Does everybody see that?
Yes.
Okay, because there are many, many transactions under $1 million, which would be excluded from the sample, and therefore you're not looking at the entire population. But in terms of what she said initially, a sample is really a sample when you take it from the entire population, not a section of the population. Okay, well done. Keep going.
Factors in determining sample size, sampling risk. When determining the sample size, the auditor should consider sampling risk, the tolerable error, and the expected error. Sampling risk. Sampling risk arises from the possibility that the auditor's conclusion based on a sample may be different from the conclusion that would be reached if the entire population was subjected to the same audit procedure. The auditor is faced with sampling risk in both tests of control and substantive procedure as follows. Test of control. Risk of under-reliance. The risk that although the sample result does not support the auditor's assessment of control risk, the actual compliance rate would support such an assessment. Risk of over-reliance. The risk that although the sample result supports the auditor's assessment of control risk, the actual compliance rate would not support such as an assessment. substantive procedures, risk of incorrect rejection. The risk that although the sample results support the conclusion that a recorded amount, balance, or class of transactions is materially misstated, in fact, it is not materially misstated. Risk of incorrect acceptance. The risk that although the sample result supports the conclusion that a recorded amount, balance, or class or transaction is not materially misstated. In fact, it is. I read the same thing over and over or not?
No, it's interesting. It's interesting that you should say that, and it's interesting that you should pick it up to suggest that it does appear to be the same. And the moment you said, "Am I reading the same thing over and over?" I'm thinking when you finish with B2, I'm going to stop you for a moment just to show everybody who's thinking the same thing that you're not reading the same thing over and over. That's just what the language, the impression the language gives. So here's the situation. Let's back up a little bit with this sampling risk. Basically, sampling risks just means this. In a nutshell, an auditor is doing a sample. Remember, a sample is only a real sample from our earlier discussion if it's a sample of the entire what?
From the entire population.
Population.
Correct. And if you are doing a sample of any part that is not the entire population, then it's not considered a sample. Okay? So we're clear on sampling. Now, the problem with sampling is even when you do a sample of the entire population, there is what we call sample risk. Okay? And we are told that sampling risk clearly, because when you do a sample, you're only picking some of all. And the moment you're not checking everything, there's a risk you'll miss something. That makes sense, yes? Okay, so the sampling risk is the risk that the auditor, even though they pick a good sample of a population, that because they're not doing it 100%, they could miss something. And they could, and no doubt, oftentimes they do. But we already established that it is near impossible, if not impossible, to do an audit of the entire population in all categories. Okay? Hence the importance of sampling. The thing is, the auditor has to recognize that in sampling, there is a risk called sampling risk, and those risks occur in two areas. Whenever we're testing controls within the organization, and whenever we're looking at substantive procedures. Substantive means important, significant procedure. Okay, so for example, whenever the auditor is testing controls with regards to the sample that they select, there's always the risk that the auditor runs that they don't rely sufficiently on the information. That's all we mean by risk of under-reliance. Okay? In other words, although the sample does not support the auditor's assessment of control risk, the actual compliance rate would support. In other words, the compliance rate says, hey, the control is strong, but the auditor's assessment suggests that it isn't, and therefore there's that risk that the auditor does not put sufficient reliance on what is actually happening, and therefore instead comes up with an under-reliance, which is a risk, because under-reliance means that they're not putting sufficient reliance in the information that they're actually looking at. And of course, that can, in the long run, affect their assessment of the audit evidence. Now, I know some of that sounds a little gobbledygook. That's okay. The important thing for you to remember at this stage is that whenever an auditor is doing sampling, that there is sampling risk, and that the sampling risk occurs in two areas, in the control area and the substantive procedure area. If you can remember those two things from your studies, you'll be fine for answering that kind of questions at this level. And then if I were to say to you, under the test of control, what are the two risks that the auditor can experience? I expect you to be able to say the risk of under-reliance and the risk of over-reliance. For under-reliance, that means the auditor doesn't rely enough on the information, and for over-reliance, the auditor is relying too much on the results that are obtained. Okay, if you can understand and remember that aspect of it, you're good for next week as far as sample risk is concerned, from a control perspective. From a substantive perspective, again, the only two things you need to remember at this stage of the game is that the auditor runs the risk of incorrect rejection and the risk of incorrect acceptance. In other words, the auditor could end up, based on the sampling results, rejecting some stuff that they shouldn't reject. And based on the sampling results, accepting some results, information that they shouldn't accept. And all of these together represents what we call sample risk. Okay? So if you can remember those key concepts, don't worry so much that you cannot remember the confuddled language that seems to be the same, like you're repeating yourself. Okay, that's just auditing mumbo jumbo. All right. The key thing is that you remember that that there is sampling risk. That sampling risk comes out of the risk of taking a sample of the population. That the sampling risk occurs in control and substantive procedure. That under control you have under reliance and over reliance risk, and then under substantive you have risk of incorrect rejection or risk of incorrect acceptance. Okay? If you can somehow put those pieces together and remember them, you should be good. Okay? I will not get you tied up in the mumbo jumbo of trying to untangle the explanation for risk of incorrect rejection and risk of incorrect acceptance. The only thing you need to know is that, hey, given the information, you can reject information that you shouldn't, and given the information, you can accept information from the sample that you shouldn't, and that's sufficient. Okay. All right. I hope that helps somebody. Okay, then I'll keep going.
Risk of under-reliance and the risk of incorrect rejection affect audit efficiency, as they would ordinarily lead to additional work being performed by the auditor or the entity, which would establish that the initial conclusions were incorrect. The risk of over-reliance and the risk of incorrect acceptance affect audit effectiveness and are more likely to lead to an erroneous opinion. Sorry, say it again.
Erroneous.
Erroneous opinion on the financial statement than either the risk of under-reliance or the risk of incorrect rejection.
Again, I'm not going to hold you responsible, you guys, for that mumbo jumbo at this stage of the game. The key stuff is what we talked about a little bit earlier. I just want you to be introduced to some of this language, because in all of the language, the little bits and pieces you pick up along the way, like funny words like erroneous, that's a tongue twister. All right, and erroneous just comes from the word error. Okay, so what they're saying here is risk of over-reliance on information and incorrect acceptance can affect the audit effectiveness and can lead to errors in opinion, okay, within the financial statements. Okay, keep going now.
Sample size is affected by the level of sampling risk the auditor is willing to accept from the results of the sample. The lower the risk the auditor is willing to accept, the greater the sample size will need to be. Tolerable error. Tolerable error is the maximum error in the population that the auditor would be willing to accept and still conclude that the result from the sampling has achieved the audit objective. Tolerable error is considered during the planning stage and for substantive procedures is related to the auditor's judgment about materiality. The smaller the tolerable error, the greater the sample size will need to be. In tests of control, the tolerable error is the maximum rate of deviation from the prescribed control procedure that the auditor would be willing to accept based on the preliminary assessments of control risk in substantive procedures, the tolerable error is the maximum monetary error in an account balance or class of transactions that the auditor would be willing to accept, so that when the results of all the audit procedures are considered, the auditor is able to conclude with reasonable assurance that the financial statements are not materially misstated.
In other words, in essence, what she's saying is this tolerable error is established by the auditing firm before they come in to do the audit of the company. And they will decide, okay, and when we conduct our samples, if we have an error limit, an error percentage that is less than 10%, we'll consider that to be a tolerable level of error, and we will not panic, and we'll consider that assessment to be acceptable. However, if the errors exceed 10% and perhaps even double and go over 20%, then the auditor will say, wait, this has gone beyond what we will tolerate, and therefore we will not accept the results of our sample review, and we will go ahead and conduct an even greater in-depth review to see if we can get that tolerable error level down to what we'd like it to be. Okay? And so again, tolerable error only refers to the level of error percentage established by the auditors before they come in. And if the error level is below that, the auditors will not worry about it. They will still make a positive opinion. If the errors are significantly above the tolerable error percentage, then the auditors are either going to have to do more checking or they're going to have to give a negative result on that particular audit. Okay? That's really what we mean by, in principle, tolerable errors. Okay? All right, and then expected errors,
Expected error. If the auditor expects error to be present in the population, a larger sample than when no error is expected ordinarily needs to be examined to conclude that the actual error in the population is not greater than the planned tolerable error. Smaller sample sizes are justified when the population is expected to be error-free. In determining the expected error in the population, the auditor would consider such matters as error levels identified in previous audits, changes in the entity's procedures, and evidence available from other procedures.
Fantastic. Thank you very much. Danielle, you've done like an amazing job with this crazy stuff. So yeah, so with regards to expected errors then, we have two error categories. Those errors that the auditor will tolerate, and if the audit sampling results review the checking results in errors that are below that rate that is established by the auditor, then the auditor will proceed and say the checking was sufficient. They'll give a positive response in their opinion that everything is okay. Now, when it comes to expected errors, if the auditor expects no errors in checking a particular area within the company, whatever that might be, then it means that the auditor typically will take a smaller sample size and just do a few checks. If they expect no errors, of course, if they expect significant errors, then they're going to take a larger sample size to see whether or not and how many of the errors that they expect potentially can actually be detected in the larger sample. Okay? And again, how do they determine this expected error? For example, if they go in and let's say talk to the internal auditor, and the internal auditor says, I've already checked a particular area and I've not come up with any problems in that area, and here's the evidence, and the auditor decides to rely on the internal auditor's evidence, then the auditor might say, okay, we don't expect any significant errors in that area. We'll just take a few samples just for the record to satisfy ourselves. And then the assumption is, okay, they don't find any errors. On the other hand, if the expected error or if errors are expected to be significant, then the auditor is going to take a greater sample size to see whether or not those errors that come up fall within the tolerable error that, parameters that they've established or outside the parameters. If the expected errors are less than the parameters that they will tolerate, they'll be fine with that. If the expected errors that they find from a greater sample are going to be greater than the tolerable parameters that they've established, then the auditor will either have to do more work or give a negative report. Okay? All, believe it or not, all this crazy stuff is going on while everybody's busy doing what they're doing and arguing among themselves as to why the auditors are in, asking to see everything, interrupting their work, causing them to be behind, asking them too many questions, etc., etc., etc. All these things we're talking about are things that are typically going on in one form or another in a particular audit expression. Okay. All right. So with all this talk about sample, something has to be said about how this sample is selected and what's the best way to select the sample that is most representative of the population, whatever that population might be, whether it's sales or expenses or liabilities or assets or revenues, whatever the case might be. They're all different populations within the financial records. Okay? The important thing we are told here at this point, after this big old discussion about sampling, is that in sampling a particular population, there must be all the items in the population must have an opportunity of being selected. In other words, you cannot try to pick out the ones you want to sample. It doesn't work. That's not a correct sample. It's like the lottery, putting all the numbers in one place and then picking one. Okay, which means that anyone has the opportunity within that group, that population of lottery numbers or bingo numbers or whatever it is to be picked. Okay, sampling for the auditor must be similar. Whatever you're sampling within the firm, all the items must have an equal opportunity to be selected. Okay. Now, there are a number of selection methods. The ones that I have here are those that are commonly used by auditors. Selection methods. The first one is what we refer to as a random selection. Random means random, that all the items have an equal chance of being selected. They throw them in the pot, close your eyes and grab one, pick a number, pick a group of accounts from the whole entire population, pick a number of sales invoices from the entire population, whatever the case might be, they must all have an equal chance of being selected. If that doesn't happen, then that sample is not considered a proper sample and certainly not a random selection. Okay. Then, of course, we have what we call the systematic selection. The systematic selection involves what we call using intervals between selections. For example, the first interval having what we call a random start, you go ahead and grab one, and that the interval might be based on a certain amount of items, voucher numbers, etc. Now, I'm not going to ask you guys to become proficient at how to come up with the concept of systematic selection at this stage of the game. That's only going to complicate a matter that still complicates even auditors in practice, which is why many of them do not use the systematic selection to begin with. Of course, some large auditing firms who are auditing humongous companies might have computer software to help them make this systematic selection possible, and therefore it becomes easy for them to manage. Okay? But there is an example under systematic selection that might be helpful at the bottom of that paragraph. It says, for example, if in a population of brand sales, a particular branch's sales occur only as every 100th item, and the sampling interval is selected as 50, the result would be that the auditor would have selected all or none of the sales of that particular branch, and therefore that would not be a good approach. Okay? Because the interval between the random selection is too close, and therefore chances are the selection will be either all uh, of the items or none of the items. And again, these are usually based on mathematical or computer functions in order for these selections to be made. So what I want you guys to focus on is the actual methods themselves, the random selection, which is the equal opportunity, and the systematic selection, which involves selecting items using constant intervals. Okay, that would be sufficient for my response. And then, of course, there's the third selection, which it answers for itself, which is called the haphazard selection, which, interestingly enough, may be an acceptable alternative, we are told, to the random selection. So in our language, haphazard usually means that there's no order. Okay? But we're saying that auditors can use a haphazard selection method provided the auditor attempts to draw what we call a representative sample from the entire population with no intention to either include or exclude specific units. In other words, don't bias the situation by adding or taking away anything from the process. If you're going to do it haphazardly, grab a representative sample and run with it and check it. Okay? That's how the haphazard selection works. Don't add anything to it, to the process. Don't take anything away. However, there is a caveat that when the auditor uses the haphazard method, he needs to be careful to guard against making a selection that is biased. And what do we mean by that? He has to be careful with making a selection towards items which are easily located, as they may not necessarily be representative. Okay? So if it's easier to get information from a particular area than it is to get it from the warehouse or another area, then that can create some bias, because that means then that the auditor may go only for the easily accessible information and not take samples from the information that is not so easily accessible in the population. And you can see right away that creates a bias. Okay, that should not happen. Okay. But the important thing is that you have these three selection methods that are available: random, systematic, and haphazard. And if you can answer those three with a simple sentence to explain it, that would be more than sufficient if that question comes up. Okay? For sure. All right. So how do we go about evaluating these sample results? Again, once the sampling is done on each item that you're checking from the population, there are certain procedures that are appropriate to helping us to evaluate these sample results, to tell us why we're taking these sample results in the first place and how they're designed to help us. Okay? So having carried out these samples, the audit procedures that are appropriate to the audit objective, whatever that might be, the auditor should then go ahead and do a couple of things as a result of the evaluation and taking of the sample. For example, if there are any errors in the sample, the auditor should take note of them. Whatever they might be, analyze those errors and see whether they can impact the end result of the auditor's decision in terms of whether it represents good audit evidence from the sample they took. Okay? So they analyze the errors to see if they are material or significant enough to be concerned about. Then we are told that the auditor should then project the errors found in the sample to the population. So if they find some errors, try to make an assessment of how the errors impact the population from which they took the sample, and whether or not these errors can be considered significant enough to affect the auditor's opinion of the entire population. And depending on the results of A and B, then the auditor should then go ahead and see and reassess the sampling risk. So if the errors are small or minimal, they don't impact the sample taken from the population, then the auditor can be satisfied that the work they did with that sample was acceptable. If, however, they find significant errors in their sampling process and the testing of those samples, then they may have to go back and reassess the sampling risk and maybe start the process all over, take a greater sample and check them again, conduct testing on them again to see if the amount of risks that come up, the amount of errors that come up are significantly lower. Okay? The idea is to achieve an acceptable level of errors so that the auditor can be satisfied that the sample taken from the population was a good one and that it represents the entire population as being typically, in this case, error-free because there are only a minimum amount of errors detected. If the auditor cannot establish that position, they are more than likely to go back and take a greater sample and run the testing again. Welcome to the life of an auditor who's actually doing the work of an auditor. Sometimes this kind of work can become so onerous that some auditors might decide to sidestep some of the steps and just kind of go with their gut based on the results of their audit testing and say, you know what, it's not practical to get caught up in all the extended detail again. This is only going to create more time and expense. I think what we have gathered here is more than sufficient, and hopefully that judgment call is a good one. Those kinds of judgment calls are not always good, but they are often made depending on the situation. And so typically, if any errors occur, the auditor will then go ahead and try to analyze those errors. Conduct an analysis of those errors to see what is actually going on. All right, so and Danielle has been just great. Let's see if we can get a second person to pick up that dynamic stuff that she did. India, are you still there?
Yes. Sorry.
Okay, great. Thought you may have been online trying to balance some entries from work. Do they still allow you guys to work from home?
I mean, the position I'm in, I don't have that option.
Oh, you don't have that option. Sorry, what do you do again?
A lot of things. Mainly,
The
I
girls
post.
Friday.
Pardon?
She's a data entry
Mm,
processor.
Oh,
Data.
oh, okay. So you're a data entry person.
yes.
Great. Let me ask you something.
Hmm.
And I'm glad you mentioned that because see, from an auditing perspective, see, watch this, India, how interesting things tie in. Because you might have wondered initially, like, what the hell you want to know what I do? What? And now all of a sudden, because I raised the question, it becomes relevant. And here's what I mean. I know for a fact that sometimes data entry work can become what? You answer the question. Is it always exciting?
No, it's become
Oh,
very repetitive.
it becomes very
Repetitive.
Yes, very repetitive. And
That's
eventually,
really uncomfortable.
yeah, and then boring. And like, God, strike me with lightning. Is it 5 o'clock yet? Whatever the case might be. That is true. Now, even though that is true, India, look at this. Whether you realize it or not, whether your company um, tells you how critical that job that you do is or not, let me tell you, if you mess that job up in any form, your company is in trouble. You know that? You realize
Yes,
that? Yes, because data entry means putting in a bunch of numbers somewhere, correct?
correct.
Imagine if you don't do that correctly. A lot of times, that information that you're putting into the system is going to be incorrect, and therefore, many transactions and statements and reports are going to be incorrect as a result. And if nobody picks it up, when the auditors come in, they're going to be like, what the hell? If they catch it in their sample in the first place. See my point? So it is absolutely critical for a couple of things to happen. One, that will help the auditor, see, to be satisfied with the tolerable versus expected error and the sampling risk that they're going to make. See, all of a sudden, this stuff applies to your job. And maybe you couldn't see that before, like, this is applying to my work. Damn right it does. And here's how. The more accurate you put that information in the system, India, the less stress you cause your organization and your external auditors and even internal auditors. See, if they can be satisfied, like just say they take a sample of India's work, 10% of your work, and they check it, see, a sample, and they check it, and they find that every transaction that India put in the system, every data entry she made was 100% correct. That then gives the auditor the comfort, see, and the assurance, like, okay, this is great. This is this is an acceptable. There are no errors, and so we don't have to even worry about tolerable errors because there are none in the sample. And as a result of that, whatever data this particular data entry person is putting in is completely reliable, and therefore we can form an opinion based on whatever her data affects that that area is acceptable, reasonably good audit evidence. I hope everybody's getting that. All of a sudden, the work of the data entry person becomes a big deal. Because on the other hand, if they check 10% of India's work and they find that 95% of the time she's making errors, they're going to be in a panic. They're going to be, my God, that means we have to check every flicking thing that this person has done. And of course, more time means more money for the company to pay the auditor, who is going to now stay longer because based on their sample, this particular data entry clerk makes too many errors. And so we cannot take the risk of not checking everything now substantively so that we can satisfy ourselves that whatever comes up in the financial statements are satisfactory. Okay? So, India, if you were thinking that that job that you're doing is just one boring, monotonous thing that is of no value, think again. And if your organization does not want to give you the credit that is due, maybe if you feel bold enough one day, you can mention it to somebody and say, I just want you guys to know that following my audit class yesterday, I am satisfied that this work I do is absolutely critical to this organization. Okay? Absolutely critical. No matter what anybody tells you. But if you mess that up, Dog eat everybody's lunch all the way up to the boardroom. How about that? And if those errors are little itsy bitsy ones, okay, we can accept little itsy bitsy. But if those errors and data entry ends up in the thousands and beyond for some reason, whatever reason, and there's a problem in Houston. Okay, India, why don't you pick it up? Analysis of errors in the sample.
Sorry, I don't have my printout today, so I have to scroll on my phone.
Oh, man. Thank God for smartphones.
Yeah. Oh. Okay, what page? You know what page it is?
Yeah, definitely. It is page. No, we don't have any pages.
67.
Oh, you said okay. You say reassessing sampling rest? No. 85. Oh, 67.
Keep going.
Evaluation. Okay. Okay. I see it. All right. In analyzing the errors detected in the sample, the auditor will first need to determine that an item in question is in fact an error. In designing the sample, the auditor will have defined those conditions that constitute an error by reference to the audit objectives. For example, in a substantive
Yeah.
procedure relating to the recording of accounts receivable, a misposting between customers' accounts does not affect the total accounts receivable. Therefore, it may be appropriate to consider this an error in evaluating the sample results of this particular procedure, even though it may have an effect on other areas of the audit, such as the assessment of doubtful accounts. When the expected audit evidence regarding a specific sample item cannot be obtained, the auditor may be able to obtain sufficient appropriate audit evidence to perform an alternative procedures. For example, if a positive account receivable confirmation has been equated and no reply was received, the auditor may be able to obtain sufficient appropriate evidence that the receivable is valid by reviewing subsequent payments from the customer. If
Now,
the auditor,
sorry, let me just say something about that so you guys can understand what all this gobbledygook is before you go any further. In this particular instance, we're saying what happens sometimes when auditors come in, or even before they come in, they would get a list of, let's say, if you're a bank, let's say your Bank of the Bahamas, where India is, they would get a list of customer loan accounts, and they will take a sample from that list of loan accounts and mail it out to the customer and saying to the customer, according to the balance at Bank of the Bahamas, the records at Bank of the Bahamas, your loan balance should now be $15,380.72. Kindly confirm if this is correct according to your records. And so when the customer gets a letter from the audit firm, the customer will do one of two things. They will say, they'll contact the auditor directly and say, yes, that is a correct balance, or they're going to say, hell no, that's not my balance. And then that would prompt the auditor to do further investigations as to why the customer does not agree. Now, that's when the customer actually responds. In this piece that she just read, we're saying if the customer does not reply, see, if there's no reply from the customer, the auditor might still be able to obtain sufficient evidence by doing what? Reviewing subsequent payments from the customer. So they go into the ledger account at Bank of the Bahamas and check to see if payments were coming through consistently for this particular customer. That will verify that the customer does exist. That will verify the customers continue to make payments. Because remember, you may or may not know, when the auditor sends notice out to the client directly, they're not only asking the client to verify their balance, but they're checking it to see if the client actually exists. Because sometimes some banks have loans on the books, but there's no real customer because somebody's created a fake loan. Did you guys know that? Anybody? Anybody ever heard about a fake loan?
Say a fake loan.
Fake loan, yes. Somebody in the loan department creates a loan for a customer that doesn't exist.
Right.
That's a
Wow.
fake loan.
Yeah,
Mr.
I heard that before.
Wilkinson,
Yes.
I meant to
Right.
say those letters that the auditors send out, right?
Yes.
How many persons you really think respond to those? Because I get those through the mail all the time and I never respond.
Why don't you respond?
It's a waste of my time
Why?
to go back and mail it in or bring it in. I'm not doing that.
I know, and that's part of the problem with the auditor trying to gather evidence about the existence of an actual account and the verification of the balance. This is why it's because of you, Danelle, that the auditor see where did India see here? Because of Danelle's uh, time to do just throw in the dump, then the auditor has to now resort to what? An alternative means of reviewing. So they will have to end up going into the bank and looking at your account in the bank and seeing that you actually exist and that you have been making payments subsequent to the date they sent the letter out. So for all intents and purposes, you are a customer, you are making payments, you are real. See my point?
But it's not even just that. Sometimes the letter, I'm getting the letter like months later. So it would make no sense to respond at that point.
What does months later mean?
Like sometimes, the mailing system isn't all that. We call it snail mail.
Right.
So for me, when I get it, it's like 3 months later.
You mean in terms of when the auditors are asking you to respond?
Yeah.
Well, yes. If it's past the date they ask you to respond, well, let me put it this way. And it's funny, conversation is a very serious thing. Just like when I said, India, what do you do? She must be wondering, what the hell? And then when she said what she does, all of a sudden, she's a superstar, whether anybody tells her that or not, whether she's paid sufficient for that or not, because of how important it is for that work to be posted correctly. Now, here's what's interesting about your situation there now, and customers like you. If you, because of snail mail, if you get the information past the date that they ask you to send it in, typically most customers will react the way you do. They'll say the date is passed, the hell with it, throw it in the garbage. However, whether you believe it or not, sometimes auditors would still want you, even though the date is passed, to respond. Because see, here's why. Even though the date is passed, based on your response, let's say your response is this. This is not my correct balance. How about that? See my point? So now, even though it's late, because of the materiality or the important nature of your response, the auditors will look at that late response and say, we need to go back now and check this to see if this client is correct in saying that this is not my correct balance. And if and when they do that, they may discover that in the letter they sent to you that shows a balance of 15,000, when they go back to the bank to check it, the balance is only 3,000. And so now they're going to say to the bank, how the hell this customer says their balance is not 15,000. What is it actually then? Then they eventually discover that it is incorrect. Some corrections have to be made, and God knows whatever else may have gone down. To the contrary, sometimes. So sending it late is not always a bad thing, even though unfortunately the majority of persons are not going to respond. They're going to throw it in the dump. And again, that's part of the risk of sending out these verification letters to audit the clients. Auditors know that there's a certain level of attrition that many of them will not come back, but they've already made provisions for those that do come back, and then based on those that don't come back, they'll do an assessment as to why they didn't come back, and maybe do some alternative checking to see what is the possible reason for them customers not responding. And in some instances, they might go back and pick a sample of those who didn't respond and do some further checks to see why not. And oftentimes, sometimes, strange things happen as a result of that whole process. Okay? So yeah, you're right. You're not alone with persons who dump it, but I'm just telling you for future reference, if something pops up, it may not be, especially if it concerns your personal account somewhere, a bad idea to still send it to the auditors and let them decide whether the information is useful or not. Okay? Again, most of us are too busy to be bothered with that doggone with saying yes or no, driving to the post office, putting in the mail, and all this kind of crazy stuff. Okay, for sure. Maybe now that we're in the electronic age, maybe they're not sending them to the post anymore. Maybe they're just emailing them to clients, and now clients can respond immediately, provided it doesn't end up in junk and disappear. Okay, or the client doesn't pick it up until later or never. But of course, the email is certainly another option and probably would be more efficient nowadays than
In that in that case, Mr. Wilkinson, I would think that's spam. And I would also think that that's probably a virus. So I'm not going to respond to it.
yeah. See, now that is interesting because what happens is we can see all these different risks that we're talking about with the auditor in terms of risk of error, risk in sampling, risk in and making the wrong assessment, risk in under reliance, risk in over reliance, risk in over acceptance. So you see, the auditor is coming into a very risky environment, all the way down to that letter being sent efficiently through an email and still not being received because the client says, wait a minute, what the hell is this from Deloitte and Touche? I don't normally get stuff from them. This must be spam. And they don't open it. I don't want anybody to get on my computer and then suddenly they don't open it, which might be one of the reasons why auditors don't send it that way. They send it through the mail so that they cannot argue with the spam issue. But now the mail sometimes takes forever and creates another problem. So yeah, and that these are all part of the risks of the sampling and testing and verification process for the auditor, which can sometimes, by the way, be very frustrating for the auditors. Okay. And so when they give you the big bill, you being the company, for whatever tens of thousands and millions, they don't feel any remorse at all because sometimes they felt as if they feel as if they've earned it. And perhaps there's some truth to that. Okay, keep going, India. Hey, where was I?
Okay. If the auditor does not or is unable to perform satisfactory alternative procedures, or if the procedures performed do not enable the auditor to obtain sufficient appropriate audit evidence, the item would be treated as an error.
There you
The
go,
audit,
Danielle. So if for people like you, if you don't open it, they can't, blah, blah, blah. They don't have any other way to check it. They treat it as an error, and then they decide, does this error fall within our tolerance or out of our tolerance? And then they go from there. Okay? All right, keep going.
okay. The auditor would also consider the qualitative aspects of the errors. These include the nature and cause of the error and the possible effect of the error on other phases of the audit. In analyzing the errors discovered, the auditor may observe that many have a common feature, for example, type of transaction, location, product line, or period. In such circumstances, the auditor may decide to identify all items in the population which possesses the common feature, thereby producing a subpopulation and extend audit procedures in this area. The auditor would then perform a separate analysis based on the items examined for each
Yes.
subpopulations. Okay. Projection of errors. The auditor projects the error results of the sample to the population from which the sample was selected. There are several acceptable methods of projection errors results. However, in all the cases, the method of projection will need to be consistent with the method used to select the sampling unit. When projecting error results, the auditor needs to keep in mind the qualitative aspects of the error found. When the population has been divided into subpopulations, the projection of errors is done separately for each subpopulation and the results are combined. Reassessing sampling risk. The auditor needs to consider whether errors in the population might exceed the tolerable error. To accomplish this, the auditor compares the projected population error to the tolerable error, taking into account the results of other audit procedures relevant to the specific control or financial statement assertion. The projected population errors used for this comparison in the case of substantive procedures is net of adjustments made by the entity. When the projected error exceeds tolerable error, the auditor reassesses the sampling risk, and if that risk is unacceptable, would consider extending the audit procedure or performing alternative audit procedures.
Thank you very much, India. God forbid, I'm not going to hold you guys responsible for that paragraph in any substantive way. The only thing I want you to be aware of in this paragraph is that whenever the projected errors are greater than what the auditor is considered to tolerate, which is called tolerable error, that the auditor would then go back to look at alternative audit procedures. That's all I need you to know from that paragraph in terms of the auditor reassessing the sampling risk. And really, the auditor will only consider reassessing the sampling risk when as we're told, the projected error exceeds the tolerable error. Okay, that's it. If you can remember that, you'll be fine for any question I'm going to ask on that particular area. All right. I think I'm going to stop there for you guys. I'm not going to start module 5. We'll pick that up after your midterm exam. I think you have more than enough information to study, to keep you busy, to get you ready for next week's examination. Are there any questions that you have at the moment about anything? All right.
Yes.
Yeah,
By
question.
being put in the exam on next week, Thursday.
Say it again.
Should we read chapter 5 for the exam on Thursday?
No. Okay. You will not be responsible for anything in chapter 5. We'll pick up chapter 5 after the midterm. Okay. So for next Thursday, you are responsible for all the material in chapters 1 through 4. Okay.
Okay.
Any other questions that are pressing at the moment? All right, wonderful. If you think of anything along the way, please feel free to drop me a note if you feel that my answer will help to sort something out that you need to get cleared up before exam time. Until then,
In terms of,
go ahead.
one question, Mr. Wilkerson. In terms of the midterm exam, like how many questions are we looking at?
How many questions?
Yes.
Probably around 10 to 12 definition questions and about 12 to 15 short answer questions max. My questions tend to generally carry 1 point for each correct answer. So if I give you 12 definition questions and you get them all right, you get 12 points. For my short answer questions, sometimes one question might have, like for example, question 1 might be one question. What is sampling risk? If you answer that correctly, you get 1 point. Sometimes my question 2 might have 2 or 3 parts to the question. You get each part correct, you get 1 point for each correct answer. And then once I grade all of them, I add up all your points and give you a grade as a total. Okay. So let's say, for example, all the definitions and short answer questions come up to 50 points in total. Whatever you get correct out of 50, that will then become your percentage out of 100. So if you get 25 points correct out of 50, then you got 50% for the examination. So you can
Okay,
actually-
and then with that, we have to get a 70 and above to pass, consider a passing grade.
Yes, 70 and above. Now remember, of course, you want to head for 100%, but you do not want to get typically a grade that is lower than 70 if you can help it. Of course, you have your project and your class attendance and participation to help you, but you want that to be not something that you have to rely on as a last resort. Only if you have to. You do want to strive for that 70 and above, so you don't have to struggle your way back coming down the stretch. Okay.
So, Mr. Wilkinson, the
Mhm.
overall grade for the class will just basically be, since it's not cumulative, just the final exam would be our overall grade?
No, what's gonna happen? Remember, 40% of your overall grade will apply to the midterm exam. The other
Okay,
40% will be your final exam, which is 80%. Then 10% will go towards your case study, and the other remaining 10% will be allocated for attendance and participation. And together, that equals 100% of your grade.
oh, okay.
Yeah, that's how it'll work, so that you have the opportunity to maximize the end result by trying to do as best as you can in all four of those categories: midterm, final, attendance, and case study. You follow?
Yes, sir.
Absolutely. I do it that way so you can have a more balanced approach and a better opportunity to maximize the end result for yourself at the end of the day. All right. Any other questions that are pressing at the moment? Wonderful. In that case, you guys remember you have a midterm next week at BIFS at 6:30 until 9:30. You cannot have any fun until after your examination. If you wish to have some fun, you have to wait until next week, Friday, to have a little fun before you start reading chapter 5 right away, and 6 in preparation for classes the following week after your midterm. So tell your whomever to not bother you this week and not bother you next week until after your examination, so that you can maximize your results.
Mr.
Until-
Wilkinson,
Yes,
where exactly Shirley Street?
yes. Oh, where on Shirley Street?
Yes. Just the schools located.
Do you know where Graham Thompson and Company is?
Right.
In that building.
Okay, I just wanted to make sure. Okay.
Yeah, right on the corner there where the Graham Thompson office is. Graham Thompson is on the main Shirley Street. This is on the edge of the Graham Thompson building. I forgot what the corner is through the corner. Anybody know the name of that corner?
I know, but that's the one like near Elizabeth Avenue.
Yeah, Shirley and Elizabeth, right on the
Okay.
corner.
Okay.
Okay, I still lost. I don't know what that is. Sorry.
By PMA.
Yeah, do you know
But
what
he
a
asked an
hospital is?
emergency, but you can't park through there. You have to park a corner east of that
Right.
Yeah.
in the
You know,
parking lot,
you know where the
or
old
if you
accident
find space in the
emergency?
yard.
Yeah, well, preferably park in Graham Thompson's parking lot,
Mhm.
okay? Because if you park on the side of the road through Elizabeth Avenue, some police working late might move your car. Unlikely, but who the heck knows about these things? So preferably, you want to park in the Graham Thompson parking lot. They have a security guard working in the security box, so you should be okay. Any other questions before we break?
No, just wondering how to retain all this information.
Oh, you can study it in little bits and pieces over and over and over from now until next week, Thursday, and you'll be okay. And
Yeah.
And then this weekend, you spend the majority of your time while you have energy and time to do the majority of your review and your study. If you do that, it should be okay.
In terms of, you know, how people spend money.
Okay?
Okay.
All right, so you guys take care. Remember, COVID is still very much alive. Try not to catch anything before next Thursday that will interrupt with your doing your examination and your life. Just be safe out there, and see you guys next week. And good luck. Okay.
Good night.
Thank you.
Everybody.
Good night.
Good night.
All right.
Night.
Good night.
On designer, I mean,